Assalamu alaikum friends, welcome to Audit and Assurance Revision Crash Course Day 4, and today's topic will be Ethics and Acceptance. So let us go to the topics that we are going to cover in today's video. Number 1 will be starting with the ethical principles. What are the ethical principles? Independence and objectivity, fundamental principles, the threads, the safeguard, ACCA's Code of Ethics and Conduct, threads and safeguard, confidentiality, acceptance of engagements, and new work and the engagement letter. So these are the areas we are going to cover today. Now let us start with ethical principles. What are ethical principles? For user, okay, user believe that auditors or assurance practitioners, they act in accordance with the code of ethics. Okay, that's the user's belief. And what about the practitioner? They need a code of ethics to make sure that they are worthy of the level of the trust that the public is placing on them. Imagine if there was no code of ethics, then everyone can do according to their wish. All the practitioner, they can do according to their wish. There is no guide, there is no guidelines for them, right? What is right, what is wrong, what should be done. So if there is no code of ethics, this can harm the user, because users place a great trust on the auditors, on the assurance practitioners. That's why there's a great need for this code of ethics, so that the public interest is not harmed. Now, from the exams focus, what are the things that you need to cover? The important areas are, you have to learn the principles under various code of ethics. Okay, but remember that in the reality, in the practical world, when you're doing when you're auditing, you should use your common sense also to decide what is right, what is acceptable in that circumstance for you, and what is not acceptable. Okay, next, now what are the sources of the code of ethics? One is the ACCA's Code of Ethics and Professional Conduct. The other one is IFAC Code of Ethics. Okay, we are going to cover the ACCA's Code of Ethics in this video. So these are some sources that you need to decide what are your code of ethics. What are the things that you need to follow? This is like a framework for the auditors. Similar conceptual framework. You can use a similar conceptual framework also for that. And the content. What are the contents of this? Number one, it will be having the fundamental principles of ethical behavior. Okay. Number two, the potential threats to ethical behavior. Number three, the safeguard that can be implemented to counter the threat. So what are the three things? The principle, the threat, and the safeguard. These are the three contents of the code of ethics. Okay, that every code of ethics contains. Now let us move on to the ethical principles. You need to remember when it comes to ethical principles that the code of ethics, this is like a guidance for the auditor, and every auditor must follow these ethical principles. And in some cases, if there is no safeguard, what should an auditor do? He should simply resign from it. He should not accept that engagement if there is no safeguard. And ACC is the one who reserves the right to discipline members who infringe the rules through a process of disciplinary hearings. If ACC comes to know that any of its members are not following the ethical rule, then it is their right. They have the right to call the member to go through a disciplinary hearings and give them their punishment for not following, right? Penalties or anything like that, or they might even allow the auditor not to practice auditing anymore. They could have dismissed the auditor from practicing auditing anymore if they find that the breach of the code of ethics is, the implication is huge. Now let us come to the independence and objectivity. Independence and objectivity are very important when it comes to ethics, because an auditor needs to be independent as well as objective. Because if you're not independent, if you're not objective, you're not being ethical. What is independence? Independence means you are free. You are not being biased. Okay? You're not being under the influence of anyone when taking decision. It is your own decisions based on the evidences that you have collected. You're not being pressurized by your seniors, your clients, anyone. You are independent. Okay? That is like a freedom that you have. from any external influence. Objectivity. Objectivity means you are taking the decision after looking all the considerations. Other than that, you don't need to bother about. Okay, you're objective. You're objective. Then, what are the fundamental principles, threats, and safeguards? This is the very important for your double A exam. You need to know the five principles, the five threats, and the safeguards. There are five principles. Okay, these are known as fundamental principles under ACCA. ACCA's Code of Ethics and Conduct. Number one, integrity. Number two, objectivity. Number three, professional competence and due care, professional behavior, and confidentiality. So these are the five principles, and the definitions you have to know. Okay. Integrity means you're honest, straightforward. Objectivity means you're looking into all the considerations and all, and then taking a decision. You're independent. Professional competence and due care means you have the necessary skills, you are up to date, you have the expertise. Confidentiality means you are not giving away the information to the third party without the consent of your client. Unless it is needed in certain circumstances, you are upholding that confidentiality principle. And professional behavior means you are not doing any action that brings a discredit to your profession. For example, you are accepting a client who is involved in money laundering, who is involved in fraud. So that is, you are breaching the professional behavior. What are the threads? There are five threads that you need to know. Number one, it is self-interest. That means you are having an interest in that organization where you are auditing. For example, fees. It could be fees. Okay. Self-review. Auditors are preparing financial statements and they are auditing that. So you are reviewing your own work. Advocacy. You are advocating on behalf of your client, the auditors. So it's a thread. Familiarity. You are very close with your client. So because of that, you are not being independent or objective anymore. You are not independent from your client. So familiarity thread is there. And intimidation, where your bosses or your senior people are pressurizing you to do something which is not ethical. Okay, that is intimidation. So these are the five threads. And now what are the safeguards? Safeguards are, it could be general, it could be specific. What are the general safeguards? General safeguard could be one that is created by the profession. Your profession might give you some safeguard that you need to do. And the other one is by the work environment where you work and all. They might be having some safeguard in the place. And that safeguard could be anything. For example, they might have a physical, physical security is there. Then they are taking care of their audit teams, that they are separate. The one who is giving the non-audit services is separate. The one who is giving the audit services are separate. So these things are there. It could be created by the profession as well as in the working environment. These are known as general safeguard. The other types are specific. What are the specific safeguard? One is segregation of duties. You divide the duties. You don't let one person do two tasks at the same time. Okay, auditors are the one who will be auditing. Management's responsibility is to prepare the financial statements and also to take care of the internal control. Next, review. Let a third party, another party, and another audit partner review your work. Rotation. Rotate the audit partners so that the audit partner, not one audit partner, becomes so familiar with the client. If the same audit has been working in the organization, let's say for 5 years, 6 years, he becomes very familiar with the client. He knows. So it's very easy for them to overlook the errors of any fraud if it's happening. So better to rotate the audit partners. Then ceasing to add. Yes. Another thing is you might be ceasing to add. Resign if there are no safeguard. If the thread is too significant, then resign. Separate teams. Use separate teams. Independent partner review. Have an independent partner review. So these are some specific safeguard that you can use. Now we are moving towards the ACCA's Code of Ethics and Conduct. The 5 Code of Ethics. Okay, these are known as the 5 fundamental principles. This you have to remember in all your ACCA papers, not just audit and assurance. Integrity, objectivity, professional competence and due care, confidentiality and professional behavior. The definition is given on the screen, right? So I've already discussed what are the meaning of each of these 5. So you can just go through this. It's in your textbook. You can go through this. The definitions remains the same whatever textbook you use. Now let us go to the threats and safeguard. Okay. So first you have to identify the threat. The auditor's role is to identify the threat in the organization. After you have identified, you assess the threat. You see whether it is very significant or the significance is not so much. Then you have to add accordingly. You have to apply safeguard wherever it is necessary. If the threat is so significant, you have to apply safeguard. Right? You could eliminate the threat completely. How do you do that? By resign. You don't accept the engagement. You decline the engagement. The other one is you accept the engagement, but you reduce that threat to an acceptable level. For example, you can call a second audit partner to review that what you have audited. So that does not eliminate the risk. The risk is still there, but it reduces it to an acceptable level, the threat. Now, let us go through this table. This is a very important table. Okay. So there are 11 examples of threat and what are the possible safeguards that you can use in each situation. Number one, if the auditor owns shares in the client company, that is a threat of self-interest. That is a self-interest threat. Auditor has an interest in the organization, financial interest because he has a share. So what is the possible safeguard that you can do? Sell the share. Sell the shares. Auditors should sell the shares. Auditors cannot have shares in the client company because it will give rise to self-interest threat. Coming to number two, if the auditor is unduly dependent on the audit fee, that is also a self-interest. Okay, and the possible safeguard is that your fees from the listed client should not exceed 1.5 and practice income for 2 consecutive years. Number three, significant outstanding fees due from the client. If you are having a huge amount of fee that is still outstanding from the client, that is also a self-interest threat. Then you should not commence the audit work until the client has given you the fees. The outstanding fees are paid. 4. You have to, if the client requests contingent fees. What is contingent fees? The fee is dependent on some uh, future activity. For example, if we get a profit of this much, you'll be receiving a fee like this. That is also self-interest, right? It is dependent on some condition. For example, it could be related to share price of the company, the profit, anything. Okay, anything. It is known as contingent fee. Auditor should refuse those kind of contingent fees. You cannot accept the contingent fee for assurance engagements. You cannot. Number 5, you cannot receive any gifts from your client. That is also self-interest and familiarity also because you become very familiar with your client. Auditor should not accept any gift from the client unless the gift is of a very small amount. Okay. Number 6, audit partner. If the audit partner, the same audit partner has been in the post for many years, it's a familiarity threat. What should you do? Rotate the partner every 7 years for the listed entities. Number 7, if the ex-auditor now works for the audit client, what happens? It's a familiarity threat. So what should you do? You have to review the composition of the audit team, how the audit team is being made, and perform EQCR. 8. If there's a close relationship between the auditor and the client, just remove the person from the audit team. Okay. Number 9. Auditor is the one who is providing other services. Other than audit, he is providing other services. That's a self-review thread. Right? So what is this possible safeguard? Keep separate teams for each services. Okay, don't keep the same team for all the services. One team will be giving one service, the other team will be giving another service. Okay, and don't provide other services to the audit clients where the significant reliance is on the non-audit work. You should not give. Number 10, if the auditor is the ex-employee of the client, it's a self-review, then don't assign that person to the audit team. If he's the employee of the ex-employee of the client, you cannot be an audit in that company. Number 11, if the client asks the auditor to represent them in the court, it's an advocacy. You are talking on behalf of the client, so you have to decline. You have to decline such engagement. Okay. Now confidentiality. Confidentiality, what is it? Information, that means information of your client or your employer that you have acquired while you were working with them, you cannot disclose it to the third party. But there are some conditions are there where you have to disclose. And if you disclose, then it will not be called as breaching of confidentiality. It is necessary that you have to disclose. What are those conditions? Number one, consent has been obtained from the client or employer. You got the permission that you can disclose it to the third party from your client or employer. Then you can disclose. Number two, there is a public duty. You have a public duty to disclose. Or there is a legal or a professional right or duty to disclose. Conflicts of interest. What is this conflict of interest? Conflict of interest is when one audit is working for the two client. Okay. So if this happens, conflict of interest will arise, right? Then what should the firm do? The firm work should be arranged in such a way that this conflict of interest does not occur. It should be minimized. You have to avoid it. Okay. Why? To prevent breach of confidentiality. You cannot give the information of one client to another client. Number two, you must notify all the affected clients. Both the clients should know that you are working for them. You have to notify of them of the conflict. And also you have to obtain their permission to act. Okay. So relating to confidentiality, you have to apply certain safeguard that needs to be considered. What are the safeguard? Advise the client to seek independent advice. Yes. Apart from you, if you are the auditor, you have to tell your client that they have to seek independent advice so that conflict of interest is reduced. Number two, separate engagement teams. Okay. You keep with different engagement partners and team members. Keep separate engagement team for both. Number three, you have to have certain procedures in your organization so that information is not passed among the two or three or four, how many, whatever the client is. Okay, it does not go from one client to another. Such thing has to be there. For example, in your organization, there's a physical separation of team members. Team members are separated physically. Okay, and when you're doing data filing, you're entering data, very secure data filing is there. Okay, sign confidentiality agreements, sign agreements that you are not going to breach confidentiality. Regular review of the application of safeguard. You have to regularly review whether you have applied the safeguard or not. And this safeguard should be done by whom? Application of safeguard should be done by an independent person of some senior level person. Okay. Then if there is no safeguard that cannot be implemented, then what? Firm must resign. They should not accept the engagement. Either from one client or both the clients. Then acceptance of engagement. How do you accept? Remember, before you accept engagement, before you accept your client, you have to consider certain issues before accepting the engagement. So what are the certain issues? Let us go one by one. So these are the certain issues. Professional clearance. They are clear professionally. They don't have any, their reputation is clean. Okay. They are professionally upholding the highest standard. Number two, preconditions for an audit. There are some preconditions of an audit. Then reputation of the client matters a lot because this can affect the reputation of the auditor also. So that's why when you're choosing the client, be very careful. You have to see the reputation of the client. All these things needs to be done before you actually accept your engagement. Professional competence. Do you have the skills? Do you have the knowledge to perform the audit for the client? Do you have the skills in the sector that the auditor is, sorry, your client is in? Independence and objectivity. You have to be independent of your client and also objective. Then fees. You have to take care of the fee. The fee should not be too low. Okay, it should be an acceptable level. Okay, it should be a reasonable fee. Management integrity. The management has to be integrate, honest in your client. Money laundering, very serious issue. Because of that, you have to do client due diligence. You have to perform. Resources. Do you have the resources? Do you have all the staff with the knowledge to perform the audit of your client? Risk. What are the risks? Are the risks too high of accepting this engagement? If it's too high, then decline. If you can reduce the risk to an acceptable level, then you might accept. And if the risk is low, then definitely it's a good idea to accept the engagement. Now, let us go to the new work and the engagement letter. What does it contain and how do you perform the new work and all? For example, work obtain. You can obtain the work by recommendation or tender. Okay. So if it is tender, tender has a high risk. Remember that. For tender, you need to do thorough research and preparation. Okay. And if assignment is offered, these are the four things that you need to do. You have to communicate with the outgoing auditors, sorry. The existing auditor who is now going to leave and you are going to take over, you have to communicate it with auditor. Number two, assess the independence. You have to assess the independence of the client. Number three, you have to see whether the assignment is commercially desirable or not, right? And also the engagement letter. You have to have an engagement letter. What is this engagement letter and what does it contain? So this engagement letter includes this thing. The responsibilities. What are the responsibilities of the auditor? What are the objective and the scope of the audit? Engagement letter will include all that thing, okay? And then reference to the legislation and standard. What are the inherent limitations of the audit? Audit cannot go and audit each and everything. There are some limitations to audit. That will be covered in engagement letter. And what communications will take place? Auditors have to communicate throughout their auditing period. Okay, for example, specific planning issues. For example, they need to plan on the use of internal audit. How are they going to use the work of the internal audit? Can they rely 100% on the internal audit? All these things they have to consider. Then the deadlines. What is the deadline that they have to finish their work by? Use of expert. Do they need an expert? All these things they have to take care of. They need to communicate with these people. And the basis for fee. You have to see the fee. How the fee will be calculated. All these things are there in the engagement letter. Okay. Then a new letter may be sent every year to emphasize its importance to the client. Every year a new letter is sent. Okay, the engagement letter. Then a new letter must be sent if there have been changes. What are the changes? It could be statutory duties that might have changed. It could be professional duties that might have changed. It could be other services that you might have been providing now, which you didn't provide before. So if there are these changes, you need to provide a new letter. What are the preconditions for an audit? There are some preconditions. Number one, acceptable financial reporting framework in place. There should be an acceptable financial reporting framework already in place for an audit to happen. Number two, management must understand their responsibility. Okay, it is their responsibility to prepare the financial statements, not the auditors. It is a management's responsibility for checking the internal control, to design the internal control. I'm sorry, not checking, but design the internal control. Auditors will come and just check whether the internal controls are working effectively or not. But the design and all will be done by the management. And management must provide the auditor with any information the auditor asks for. These are some preconditions for an audit that has to be there for any audit to work. Now, from exams point of view, what are the questions that you need to do from your revision kit? For section A, that is your objective case questions, you need to do these questions. Bark and Company, Miranda and Company, Tigger and Company, and for section B, you have to do Cinnamon, Orange Financials, and LV Phones. So these are some questions that you do. This will give you an idea of your ethics and acceptance. Okay, so that's it for day 4. Tomorrow we'll be covering day 5, risk. I'm sure most of you are waiting for this topic, risk. We are going to cover all types of risk, audit risk, what are the internal control risk, how to overcome the risk. So the topic is risk. So that's it, guys. Thank you for watching and see you tomorrow.